global markets are looking a bit gloomy today. It is not, however, as bad as it is in India right now. Nifty, Bank Nifty continue to be in red and they are both 7% away from new lows for the year. Today, the biggest cuts were in Nifty IT and Next 50. Let's see if Nasdaq is worse because the news in US is not looking good. Nvidia is down around 11-12% in pre-market. And Indian market it's getting more and more depressing, especially for retail. If you are not a trader shorting the markets, it is not a pretty picture at all. Only ICICI Bank, which gave decent results, that was up, along with SBI and HUL a bit. The biggest fall came in IT. Look at HCL Tech here. Even Infosys 3%. And ATL, which usually stands tall in markets like today, that also fell 2.5%. Wipro 4%. These are big cuts now. The cuts are getting bigger by the day. Yes, we still have some greens, but these are diminishing very fast, especially in the broader markets. Now, my portfolio continued to bleed. In fact, one of the portfolios today was down 5.5% for the day. Yes, it's the portfolio, not a stock. That is because it had Tejas, CAMS, Motilal Oswal, defense stocks, and consumption stocks. All of them were down. Railways is not looking pretty at all. In fact, I took a hard decision today. I got rid of IRCTC. It's basically retail giving up their hopes on budget to a large extent, maybe by post budget, depending upon how the budget is. Defense probably is the same. Most people have lost their patience for now and people have started exiting. They might come back in a day or two if markets look better. Looks less probable. 3.5% down for the entire bunch of defense stocks. I have not seen defense this weak for many years now. HAL is in red. This is the largest defense stock. The Nugget section today is a bit different. This is something I thought a lot over the weekend. I thought I'll share some of the things that I am doing right now differently. My basic thought process is, suppose you bought something for $100, which is now 80. It is probably a lot lower than that. Then what you have is 80 right now, not 100. Now this 80, step one, you have to take it to 100 and then maybe a bit of profit after that. So the stock that took 100 to 80, that could be the stock you want to ride to take it to 100. But if that stock is not in the flavor or favor right now, maybe switch to something else which will run faster to 100, maybe till 90, and then you switch back to this particular stock yet again. Basic idea is this is money, this is not stock. Money is supposed to grow and stock is the medium. You need not stay with the medium that is not working out right now. 6 stocks up only in Nifty 50. Not next 50, and the index was down 1.14%. Only stocks up were ICICI Bank, a little consumption here which is HUL, SBI, M&M and Britannia. This entire bottom tier was dotted with IT, TCS, Infosys, HCL. HDFC Bank is also at the bottom, Reliance is usually at the bottom these days, and today Airtel also in the red. Next 50 not much better. The reds were similar in number. Torrent Pharma is at the top today along with DLF, Pidilite, Indigo and Loda Builders. But note that these gains are very small. However, the losses are not small at all. These are big fat losses for the day. At the bottom we have HAL, LTI Mindtree, Zomato, LIC and Geo Financials. And if you look carefully, there is not a single green but a lot of reds now. A really long tail and it ends with software 90. The only lone warrior here, which is one sector up, was HUL led personal and household. See here, only one sector up. And only cement, which is Ultratech, and holding companies, which is Bajaj Holdings, seem to be making money for investors right now. What that means is if you bought anything in the last 2 weeks or so, that is in losses right now. Thanks to ICICI Bank, Nifty at least had some moments of going up. Next 50 was totally down, Nifty was down, Sensex was down. Look at Reliance. Attempted a bit of recovery but then fell. TCS was down whole day, Infosys down whole day. ICICI stood tall. Airtel, even HDFC Bank. The big gap down meant that the trading range was smaller than the fall in Nifty today. The same old pack of Axis Bank, IndusInd Bank, and IDFC continues to make new lows. Now you'll note one phenomena that if a bank or if a company is doing well, people will rush towards that. They will sell what is right now not working out and buy these stocks. So ICICI, SBI right now have been bought at high volumes today. Private sector banks is fast moving to all red dashboard. Now you'll see some select banks, be it private sector or public sector, they will jump a lot, either based upon news or probably reasonably good results. Good volumes, but now only SBI is the non-red stocks in public sector banks. No one wants to own a single investing stock right now. Motilal Oswal is now available at a very cheap P, 11.88. Still no takers. 4.5% down today also. Right now, this is not a fear of Kalyan Jewellers plus Motilal factor, but Reliance Jio, people are scared of the disruption they may cause, because typically it is expected that brokerage charges will be zero for 2 years, 3 years, and none of these companies will earn any money. 5% down for investment banking sector, a lot of reds, no greens, and these stocks will now fall more because there is a lot of money still on the table right now. The cuts in insurance also are getting bigger. I was expecting some of these stocks will go up ahead of the budget. NBFCs are bleeding right now. Everything is bleeding. Even the public sector, PFC, REC, IRFC, IFCI pack, they have been going down like 9 pins, nearly down 50 to 70% from their recent highs. Only Bajaj Finance and Muthoot Finance are green. Gold finance companies may do well if economy is not doing well. There is no point talking about microfinance right now. 6 stocks hit fresh lows. I've been skeptical about IT and I've missed a lot of the boom, especially the last 1 month. But this is what I was fearing. Nasdaq may crack a lot today, and that will have a rub-off effect on these companies, because most of these services companies are dependent a lot on the US economy and orders from US. Large cuts, 3, 4, 5% in most stocks. No respite for the SaaS companies as well. Swiggy is in the red along with Ixigo, Tanla, and MobiKwik. Ixigo's results are still not out. This is perhaps one of the largest holdings in my portfolio. I don't expect anything good right now. Results will be good, but markets will not like them. And this stock will perhaps be down 10% tomorrow. Telecom, the bleeding was led today by Tejas Networks. The news that they don't have an order book looking good right now, that has spread like wildfire. I personally find it absurd right now, but yes, you can't beat the market sentiment. Note that the BSNL order was in collaboration with Tata's, which is TCS, and CDOT, and I expect many such orders to come their way very soon, because government's orders were on a standstill last 6-7 months. They will pick up now. Mahindra was up 1%, but besides that, no auto company was doing well. Ancillaries continue to bleed, especially the battery companies. 4 companies in this pack hit fresh lows. Days like today, when everything is cracking, you can't expect metals to do well at all. Tata Steel results are not yet out. Note that the bad news for steel companies is already priced in. Oil and gas, MRPL, and Chennai Petro hit fresh lows. There's a comedy which happened today. IOC results were not good, and this caught me by a little surprise, so I did a bit of digging. So what happened was, there was a time when crude became costly, and then we added windfall tax. As a result, the GRMs, which is the refining part of these companies, that went for a toss. It became very low, close to zero. Now, because of GRMs going low, there was very less money left for the companies, the stocks tanked, and the investment cycle broke. After that, what happened was that the crude prices went down. But we were in election mode, so windfall tax was not removed, and as a result, profitability went down even further. And what happened was, since the crude was cheap here, we piled up the inventory, but that had windfall tax on top of it. Now we have crude which is cheap, windfall tax which is gone, but we have an inventory which is expensive because of windfall tax, which won't be reversed. So all this compounds in this quarter for a bad result for IOC, which had the largest inventory. And I have said that IOC had the largest inventory. Instead of winning because of that, they ended up losing and with lower profit this quarter. This sector is a victim of elections and windfall tax. You won't even get dividends. Power sector without any reason will soon be a red sector, which means every stock will be red here. This is getting close to a perfect scenario for someone who wants to invest in India for 10 years with a long term horizon. You just need to be on money right now to invest with at least 2 years when you will not look at the portfolio. And yes, we could fall a lot more from here. Renewables continues to bleed. Right now, the defensive sector pharma is also bleeding. Laurus Labs down 11%. The CDMO thing has taken up some of the companies to obscene levels. See here, Laurus Labs, Pyramidal Pharma 560 PE. Some of these stocks could destroy investor portfolios if held in large quantities. There is no point talking about sectors like sugar on a day like today. Only two stocks in the consumption edible pack were green today. Britannia up 1.5% and Adani Wilmar after hitting a new low recovered a bit. Today the cuts in non-edibles were deep. The companies which have done very well of late were bleeding most. Page Industries down 4%, Gillette 4%, PN Gadgil, Jyoti Lab, Bajaj Consumer along with 3M they hit new lows today. Kalyan Jewelers continues to bleed another 5%. This stock has lost 5% kinds for nearly 10 sessions now. Needs to go up 82% to hit a new high. I don't think this is going to happen for several years now. And in today's environment also, associated alcohol hit a new high, rocket volumes. Tata Group complete red, three stocks hit fresh lows: Tata Motors, Tata Communication and Rallis. Adani Group no exception, only Ambuja Cement is non-red. One of the fattest red bars that you have seen of late, Nifty 83.5% down, Nifty Energy 2.5%, next 50 3%. Look at Nvidia cracking 3% yesterday, which is Friday, and pre-market 11.3%. This is nearly 450 billion dollars lost in Friday and today's pre-opening. Think of what impact it will have on Nasdaq. This is the impact of DeepSeek Fry's AI. This is a new chip making company which has caused ripples in the industry because of the cheap cost and the impact they could have on the prices of AI, the price at which AI business is done. Indian Oil I talked about, even Coal India no better, 17% drop in profitability. I did not even feel like going through the results of these two companies today. FIIs, DIIs, the same racket continues. FIIs sold 5,000 crores, DIIs bought more, 6,600 crores, gold 80,000, silver 91,000. And Bitcoin has gone crazy. I'll tell you a very funny thing. Till yesterday, probably over the weekend, Bitcoin was nearly at a lifetime high. However, most crypto investors have lost 50, 60, 70% of their wealth since Mr. Trump came to power. This is the craziness in the crypto market. And look at this, 76.88 levels for Brent, yet oil marketing companies are not doing well at all. My trade for the day, this was probably expected. I sold today. I swapped actually. I sold a part of JM Financial. I don't think this will improve a lot right now, and I bought a bit of CAMS. I sold JNK Bank. The results are out. The stock did not move anywhere. So I bought SBI using it. I exited JNK Bank for now. I sold IRCTC. I'll probably buy a defense stock or something maybe. I also exited HAL. These two combined, I'll invest somewhere if I want to. Right now, I'm holding to cash here. I sold Bajaj Auto. I don't expect this stock to do anything for next 6 months probably. I sold off the PSU Bank ETF. Right now, the cuts were not that deep. I sold a little more Satin Credit. This quarter they will probably write off or provision most, and Britannia it will go up next few days, but I still sold off because there was a good money here which I could rescue. It's okay to let go of 5% 10% gains in Britannia for now as long as it gives me a little cash. A lot of loss booked, but that's okay. You have to do what you got to do in today's market. First, there is no one on your side. FIIs, DIIs, government, even retail participants, your other colleagues, friends around you, everyone is fighting their own battle right now. So you can't look at each other, what they are doing, what they are not doing. Someone is making money, someone is losing less. Everyone is fighting their own battle. They entered at a different time than you. They have different money available to them. Some of you can average, some of you can't average. Note that these two individuals, this guy is on a trail, he is enjoying and building his health. This guy seems to be up to something wrong, really depressed. The choice is mostly ours, what we do in this situation. Note that every storm till date in last few centuries has always ended with a beautiful day ultimately. This storm will also pass and there will be a beautiful day after it. All it requires is you need to be standing at the end of it. The second action, you have to be very, very, very clear right now. You are trading or investing. The rules are totally different. If you are trading, you have to have a stop loss. You can't have a trade and a 40% loss in that. And if you are investing, then you should be riding this storm. You should not be looking at your portfolio saying that I am an investor 1 year, 2 year, it's okay. I'll buy more when I have money and the markets have stabilized. You can't mix these two. You can't turn a trade into investment if it goes wrong. If you are not a professional trader, then don't borrow money, do not leverage, and do not get into FNO at all. These three things will kill you beyond the money that you have in your hand. You might end with debt, not even knowing how you will repay it. And definitely don't put the money meant for things like rental, school education at all in the stock market right now. I already explained this part, swap to good stuff right now. When you buy a stock, you can pay in cash or you can pay in kind. What that means is if you have a stock A which is not that good, you can sell that to generate cash and buy a stock B as long as stock B is better than A. But you have to ride the fastest horse now if you are trading specially, or the strongest horse if you are investing. If you got to change the horse, please change it now. The fall, though it is getting bigger, it is not over yet. Markets have gone up like crazy since pandemic time. Yes, we are not going back to pandemic times, hopefully, because a lot has changed. Overall, the money supply has tripled. So the fall should be max one third of the rise since pandemic. But again, in these markets, there is no technical level, there is no stop loss, there is no support zone, resistance zones. All those things go for a toss. You are an individual, probably in deep losses, deep trouble, but you are not alone, which means there are millions of you. Even I have spent 18 years in this market. I am among you only. I am in deep losses right now. It's not you alone. It's not that you have done something specifically wrong. The losses for you and me could be different. My losses could be higher than yours. Depends upon the instruments we have purchased, and our recoveries also will be at different pace. No level is too low. Stocks and indices could go to any level. You might not even be able to imagine right now what these could be. Now, there could be a recovery tomorrow lasting several days, weeks. I'm not denying that. The budget could be fantastic. It could take markets to new levels in 1 week, 2 weeks' time. I don't know that. I can't predict that. Also, speculative or low growth, low quality stocks will not recover faster. There may be certain stocks, the recent highs for them could be lifetime highs for a long time. Some stocks may not ever hit this level again in their lifetime. A lot of stocks may not hit these highs again for next few years, 4 5 years. Don't expect that. Don't keep money stagnating in that expectation. If you ended up with a not so good high quality stock, switch and get to a better horse if there is a requirement. This is only for knowledge purpose. This is what I am doing. Pick what you like, otherwise continue doing well. You don't run out of money for sure. You will get stocks, good stocks at crazy levels. You will need money. How you get money at that point, you will have to figure out. Thanks for watching. I will see you tomorrow. Don't worry, the storm will pass.